and welcome to Markets Today. I'm Lata Venkatesh, and joining me from the Delhi News Centre is Feb WPI. It was a down day for the markets, but the falling momentum has certainly slowed compared to Friday and compared to last week. There was also a slight bit of leadership change. We saw some selling coming in metal stocks. Big time selling was in metal stocks, to some extent in FMCG. But to counter it, IT stocks seem to be gaining a little bit of favor from investors, as also we did see banks not getting badgered too much, so that lent an edge of stability to the markets. Hi, Surabhi.
Hi, Lata. Yes, lots to watch out for this week. It's a week of central bank action, particularly the US Federal Reserve. Plenty to talk about over the next half an hour. Let's start with the headlines. Markets start the week on a quiet note, with the benchmark indices losing around 0.2% each. The Nifty ends at about 86.30. The Sensex loses 65 points. FMCG, metal and oil and gas stocks log losses.
The midcap index ended down 0.4%, underperforming the frontliners. Infrastructure companies like stocks of IRB, NCC and GVK Power saw profit taking. Monsanto's shares fell 6% on the Supreme Court's observation against genetically modified crops. Persistent Systems dropped 5% as the management says the company will miss its revenue growth guidance in the current quarter.
Feb WPI inflation falls to a 4-decade low, comes in at minus 2.06% thanks to a big fall in prices of fuel and manufactured goods. The drop in manufactured product inflation raises concerns on growth recovery.
And here are the experts that we have lined up on the show for you today. Saurabh Mukherjee of Ambit Capital will join in with his outlook on the markets. Siddharth Sanyal, the chief economist of Barclays, will talk about the WPI numbers and whether rate cuts are likely to come. Are they immediately in the horizon? We will also get you the managements of some of the companies that were in the news, notably DLF.
Okay, so all that opinion coming your way, but let's start first with the trading action on the street. A new week setting in, but no sign of enthusiasm on the Lal Street. Bulls remain sluggish as markets ended a tepid session with marginal losses. Anuj Singhal is now here with the day's trading action highlights. Anuj, should investors brace for perhaps even more consolidation as the week progresses?
But traders certainly should. Investors, of course, could be looking at buying opportunities. But what was interesting today was that the market at all points or at most points were consolidating, but no particular group, whether bulls or bears, had a strong hand through the day. It was more of a sleepy day, but it was the day spent with negative bias. So you have to say that there are a lot of stocks and sectors which are now coming out on top. For example, IT stocks did well today. The mid-cap pharma space, that did well today. And some of these sectors are now looking like taking over the leadership sector. Let's talk about some of the stocks that led to the decline in market though today. We'll begin with metals, where there were of course some losses in stocks like Sesa Sterlite, Hindalco, NMDC. These were your top 3 losers in today's trade. Apart from that, you had some other heavyweight losers like Bharti Airtel that corrected after a strong run. HDFC was down 2% and ITC was down about close to 1%. In the IT space, it's really been remarkable the way TCS has struggled, but still the rest of the IT stocks are doing well. Today also, HCL Tech and Infosys were both up 2%, while TCS, the leader of the pack, was actually down about 0.5% in trade. Some other prominent Nifty winners included DLF, that was up 4% in trade today. Asian Paints was up 2% and Z Entertainment as well, up 2%. Now let's talk about the sector of the day, the mid-cap pharma space. That really had a mind-boggling session. Suven Life Sciences was actually circuit up at closing. Wockhardt up 6%, Dishman up about 6% or so. And on the losing side, you had some high beta names which corrected. Alok Industries was down 4%, Reliance Communications was down 4%, and Voltas was down about 3%. So for now, it looks like there's a bit of a relief to the bulls in the sense that the selling momentum may have been arrested, but really, the market is still not showing signs that it's ready to take off from here or have a big rally.
All right, Anuj, thanks so much for that. So that was the market action. Let's get you some opinion as well. Saurabh Mukherjee of Ambit Capital says there is still a great deal of unwarranted optimism in the market currently. He expects to see a pullback, especially in the Sensex earnings.
My reckoning is Sensex earnings for FY16 are going to see big pullbacks. I think the next 8 to 10 weeks, I'm fairly confident you'll see a fairly punchy pullback in FY16 earnings estimates. My reckoning also is that economic growth estimates for FY16 will see a meaningful pullback. I think there's a great deal of sort of unwarranted optimism in both our profession and in generally in the in the sort of public sector. IMF type estimates about FY16 economic growth. Some of the numbers are just fantastic as to how India will post 8% plus economic growth next year. I think as economic growth numbers pull back, as earnings numbers for FY16 pull back, you're bound to see a degree of moderation in market enthusiasm. As expectations subside about how quickly the economy can recover, I think the bullishness is abating a little bit, which I think is healthy. I think people have got a little too excited going into the budget, and I think as the bullishness subsides, it does make sense for people to reduce their exposure, not just to the market, but to reduce their exposure to the cyclical sectors.
Okay, so that's some advice on how you can change your stocks in the dips that may come in the markets. But let's stick to the markets of the day and all the action from the futures and options space. Let's go across to Varinder Bansal.
Well, clearly a dull day for the markets with a very narrow range in terms the market was flowing, but if you're watching out for Nifty, 8,500 to 8,700 remains the band for the market. Watch out for the options data, clearly suggesting you that 8,500 is the base for the market. You're constantly seeing put trading happening at 8,400, 8,500, and on the upside, which is a wall for the market, clearly it is 8,700, because you are seeing unwinding happening in from the put writers. You are seeing call writing happening at 8,700. That remains a zone to watch out for on the upside. So band is that 8,500 to 8,700. But yet again, it was a day which belonged clearly to the pharma sector. One strong, which is the strongest, was clearly work hard. Long build-ups over there. Stock was up by nearly 6%. Aurobindo Pharma saw short covering happening in. There was some build-up happening in Strides Arcolab. Also two stocks which are in the news, but were up on back of short covering. DLF clearly, another 4% move up today on back of short covering. And GSPL was one stock which actually recovered nearly 9% from day's low. It opened down nearly 6%, but ended up by nearly 3%. Watch out for that stock. And two stocks which are slowly and steadily, seeing upside in the last few days, have been Z Entertainment and Asian Paints. Both these stocks are up even today on long build-up. And telecom was one space where clearly unwinding was seen today. So all the stocks, whether it is Idea, Bharti, Reliance Communication, you were seeing unwinding pressure happening in. So again, it was pharma, who saved the day. But as I said, it was a very narrow range in which the markets are flowing today. So let's see what happens tomorrow.
All right, Varinder, thanks so much for that. That's the futures and options action. But let's talk about the biggest macro news point of the day, of course. The wholesale inflation number for February is down a negative 2.06% reading, as against the expectations of a 0.6% decline. Lata is now, of course, with us. Lata, the headline number seemed great because it was a negative 0.2%. But how should one read the fine print and the internals of this number?
Inflation is good so long as it is low. It is not very good when it is negative because it indicates deflation. Manufacturers don't want to produce goods when by the time they produce, the good is even cheaper than when they started producing it. So to that extent, this is actually bad news. Well, food inflation has not climbed much. It is 7.74 year on year compared to 8% in January. So that's not terribly a worry. There were some fears that the unseasonal rains would have disrupted that. It showed up in CPI, not showing up so much in WPI. The big worry is manufactured products, down 0.3% over the month, up just 0.4% year on year. And there you can see very clearly that part of the manufacturing sector which is exposed to global metals or to global commodities, what you call traded goods. And that's a substantial part. For instance, base metals, it has an 11% weight in the index. That's fallen two-thirds of a percent, 0.67% month on month. From January levels, it has fallen 2% plus if you compare it to year-on-year levels. Likewise, chemicals has a 12% weight in the index. It's fallen 1% month-on-month, fallen almost 1% year-on-year as well. Basically, these commodities have crashed in the global market, and with a strong rupee, their impact on the domestic prices is even higher. As well, we all know that there is slack in the manufacturing system anyway for want of demand. Will this push ahead the RBI's rate cuts? Unlikely, because we have seen a seminal breakdown in wholesale prices all the way from September. It didn't propel the RBI's hand up until December. It propelled it in December, in January, only when an across-the-board fall, including in food prices, was noticed by the Reserve Bank. And since CPI showed a slightly firmer trend, my sense is that the Reserve Bank will wait to see how the rise in petrol diesel prices on February 28th, how the freight price increases in the railway budget, and how the service tax increases in the general budget are working their way into the CPI. It is only then that they will move, and those numbers will come to us only on April 15th or 14th, not on April 7th when the RBI presents its credit policy. My sense is that we are going to get the next rate cut only after April 7th, maybe mid-quarter before June or maybe in June. But the WPI numbers itself, it's an ugly truth, the fall in wholesale prices, but not enough perhaps to move the needle for the RBI in April itself.
Okay, well, on that note, let's get some reactions from the street as well on this inflation number, the wholesale price index number that we've seen today. Reactions coming in from Barclays and Nomura.
We expect just one more rate cut in the next quarter and some kind of a pause. But having said that, the broad trajectory of disinflation cannot really be ignored. Our baseline expectation is in June, but it's nevertheless a very, very close call. But the broader message is we expect one more rate cut and a bit of a pause thereafter.
Our view has been that the big disinflation that the Indian economy has seen over the last 12 months is essentially coming to an end. And over the course of the next 6 to 12 months, we are expecting inflation to broadly stabilize. We're expecting RBI to essentially stay on hold going forward. And our expectation is that the RBI has front-loaded their interest rate cuts.
Right, so not terribly bullish on rate cuts. But even as the government revels in the success of the first ever coal auctions, some uncertainties are mounting for some companies that won the coal mines. First bids for 3 mines came under the scanner, and now CNBC TV 18 learns that bids for 5 more mines will be re-examined. Anju Sharma is here with all the details.
That's right. Government auctioned about 13 coal blocks in phase 2, and now we understand that the government has directed the nominated authority to re-examine 5 successful bids, which includes bids of Jindal Power, which won Tara coal block in Chhattisgarh at 126 rupees per ton. It also includes coal blocks won by Hindalco, JP Cements, Usha Martin and Tirumala Industries. Remember, the government is yet to take a decision on the 3 coal blocks which were also sent for the re-examination on similar grounds of bid amount and timing of the participation of the successful bidders. The process was that nominated authority submitted its report, and then it was sent for an interministerial committee to deliberate upon, and then a final decision will be taken up by the central government. As CNBC has reported last week, that the government is of the view that the government has the powers to re-auction the coal blocks to derive a greater value if it senses that the value arrived from this auction is not enough. We are yet to see what decision central government will take for these 5 and 3 coal blocks which were auctioned in the first phase. Back to you.
All right, Anshu, thanks so much for that. Well, let's now move on and take a look at some of the stocks that were in the news today. Realty major DLF gained in trade. This after its promoters deferred the conversion of securities held in the Realty major subsidiary into equity shares till March next year. This is, of course, last Saturday. DLF also slashed the coupon from 9% to 0.01%. Let's listen into what the management had to say.
Some of these actions which were like on a pause mode for the last 5 months, we would now begin to move ahead on some of these. So clearly, be it the CMBSs, be it getting the game plan ready for the REITs, and obviously the planning the complete entire issue of the resolution of the CCPSPs. So all of those are action plans which we intend working on over the course of the next next few weeks and months to get them onto the market.
Okay, Persistent Systems was the other stock that was under pressure today, down nearly 5% after the company announced a muted revenue growth guidance for the 4th quarter of the current year. Speaking to CNBC TV 18, the management said the margins will remain under pressure due to investments in R&D, sales and marketing. Listen.
We did give an earlier indication of a 15% growth, which is going to be not possible this time. This quarter's growth will be muted, and the part of the reason is partly because of some of the existing accounts where we have had relationships where the customers have changed their priorities.
And some news from the tech space as well. Wipro has got itself a new chief operating officer. India's third largest IT company announced the appointment of former TCS back office head Abid Ali Nimujwala as group president and COO with effect from the 1st of April 2015. In his new role, Nimujwala will head several of Wipro's service lines, including global infrastructure services, business application services, business process services, and advanced technology solutions. Time for a break now, but coming up, Sudarshan Sukhani is going to be joining in for a technical chat. We'll also get you some trading ideas.